Hello everyone, my name is Travis Kitson from Beacon Wealth Partners, and today Jack and I wanted to review the changes we've made to your portfolios. As of this recording on January 31st, markets have had a strong start to 2023, and we hope that these trends will continue. We could, however, see heightened volatility in the short term as topics such as interest rates, inflation, and the war on Ukraine continue to dominate the news. However, overall, we do anticipate 2023 to be a better year for markets compared to 2022. So in recent years, we've seen a transition to renewable energies, electric vehicles, and the demand for batteries to increase. We expect these trends will continue to grow and have added exposure to companies that source and mine base metals that are used in these fields. So specifically, these base metals include copper, nickel, lithium, and cobalt. And we decided to purchase iShares Global Base Metal ETF. In our view, the diversification provided by the ETF, which owns about 35 companies, was preferable to owning an individual one. Within your portfolio, you also own a company called Brookfield, and this is a Canadian company with a long history of managing real assets, which include renewable energy, data centers, ports, railways, real estate, and businesses that they've acquired, as well as having a division and managing assets on behalf of others. In mid-December of 2022, they split their business into two parts. One, the real asset division called Brookfield Corporation, and two, the management of assets on behalf of others called Brookfield Asset Management. We've gone ahead and sold your Brookfield Asset Management shares and decided to reallocate the money to other areas of your portfolio. On to you, Jack.
A few years ago, we reduced your exposure to fixed income, which are the bonds and preferred shares within your portfolio. We knew that these investments would not do well when central banks increased interest rates, and in 2022 we saw rates rise with a historic speed, which pushed the price of fixed income investments down. With most of the interest rate rises complete, fixed income has become more attractive, and we've increased that part of your portfolio by 5%. Over the last year, we've also increased the number of defensive positions within your portfolio. With markets still showing uncertainty, we have added exposure to drugs, another defensive sector, by adding the company AbbVie into your portfolio. AbbVie is focused on finding novel solutions to issues like rheumatoid arthritis, Crohn's disease, difficult-to-treat cancers, and eye diseases, to name a few. It has an extensive pipeline of roughly 50 new complex molecules in trials. Since 2013, it has had 25 treatments approved by regulators. The company was spun out of Abbott Labs end of 2012, and through the end of 2021 has shown good growth by increasing revenues and net income by about 3 times, and its dividend by over 2.5 times. AbbVie scores very well in the metrics we use to evaluate companies for inclusion. When we conduct reviews of your portfolio, part of our selection process is to review companies' revenue and earnings over the last 15 years or so. We look for well-run companies that are able to grow and develop new products and services. Over time, this enables their share price and dividend to rise. If you're interested, Brookfield Corporation's new symbol is BN. The ticker for the iShares Global Base Metals ETF is XBM, and AbbVie trades under ABBV in the States. As always, this presentation reflects our opinions and is for general information purposes. Travis and I wish you a happy and healthy 2023, and if you have any questions, please reach out to us. Thank you.